a CAPO. Just wanted to start reshooting some of these videos so that we didn't have any other association with anything. So I'm going to be going through a couple of these things to show you how to set up certain scanners on thinkorswim. First is going to be the TTM Squeeze. So this is going to be used for swing trades and swing trades only. So if you don't really have any use for this video, then you can just exit out and find another one. But the TTM Squeeze shows consolidation, volume, moving average. It's kind of all categorized into one platform so that when you pull it up, it just shows everything in one. It makes it a little easier on the trader. That's one of the things, when you see TTM, that's one of the things that's specifically thinkorswim. So we can, like I said earlier, we use this chart for swing trades. I haven't seen it used on anything else. Like I've tried to use it on day trades and things like that, but it's not really applicable. First, you want to find a stock that's right in its 52-week high or close to its 52-week high, and I know that it's going to be kind of hard to do because COVID's hit, so you're going to be looking at something. And remember, the 52-week high is a rolling average, or so it's not going to be like 52 weeks and then on March 19th 52 weeks and then on March 9th it's going to be rolling, so that you know exactly what's going on with it. Numbers may be off a little bit, but just look over the last 3 months to make sure that you're seeing exactly where it was sitting at before COVID, what happened when it hit, and then what it's doing right now. That way we can see if there's any kind of bounce back once the market gets back to normal. I'm going to tell you guys right now that August is one of the slowest months in the market, so guys, be patient. The good thing is there's a lot of volatility, so that's why you're seeing penny stocks jump off and a lot of people make money. But when things get back to normal, it's going to be kind of steady as it goes, and you're going to want to have these reputable companies that have great earnings and just year after year after year just are producing good numbers, and they're continually on the uptrend. Now I'm going to show you what kind of settings we need to do on the computer, so bear with me and we're going to switch over, and I'll talk to you guys in a minute.
Alright guys, so this is the thinkorswim platform, and we are looking at the GE stock, a day over the year time schedule. So there are multiple different options on thinkorswim that you really need to become familiar with when you're looking at things before you just dive in. This is really more intermediate to expert level kind of stuff, but if you're planning on reading stocks, then this is the go-to for everybody. So as I said, I have GE stock pulled up. We can see how it's been performing. It was doing really well, you know, getting its little jumps here and there. Boom, COVID hits, comes back down, gets a little bit of news back then, comes back up. People are expecting it, and then it was really downhill from there because everyone was almost expecting GE to file bankruptcy. We see a little jump after it got a little good news, and then it's just kind of been averaging out and not really doing anything, fizzling out, and just really kind of almost in a downtrend at this moment, excuse me. So if we go and we extend this up, we can really look at the details of this. And one of the very first rules, especially when you're trading, is you want to look at these candles. These candles are going to tell you a lot. So basically, whenever we jump in and we see that this is on a little rise, and then it jumps down real quick, and then people are starting to get interested in it, and then it just jumps up, jumps up, jumps up, jumps up. So right here is a good example. You can see that you've got one big green candle that comes up, and then the next green candle, there's a lot of uncertainty because you've got a big wick on the bottom and a big wick on the top. Next, what you're looking at is this candle right here. This is the candle that has basically confirmed that you're basically going on a downtrend again. Anytime this candle or one of these candles takes up 50% of this candle, that means buyers have lost control. Now it's in a sell phase, so everything's going to start going down. You'll see it again throughout the charts as well too. One of the reasons that I'm picking this stock is because I want to show you guys how easy it is to read on this. So let's go ahead and jump in. We're going to come up here to studies, down to edit studies. One of the very first ones you're going to see is ATR. Double click it. Come up to the search box. Type in TTM. You're going to go down until you find TTM Squeeze. Double click. Come back up to the search box. You're going to type in MOV. And then you're going to come down and you're going to look for moving exponential. You're going to click it twice. Now you're going to come up to your very first moving exponential, double click it. Come over here and you're going to see these little arrows. You're going to see this number 9. Click down until you get it to the number 8. Come over here, change the color to whatever color preference you like. Just remember that the charts change color during the day, so some colors are harder to see than others. I'm going to pick yellow for right now. I'm going to come up to the second moving average exponential, click it, and I'm going to move this one up to 21. So that's an 8-day and a 21-day moving average. You can leave this one blue, pick any color you like, hit OK, hit apply, and then hit OK. So what you're looking at here is the TTM squeeze on the bottom, and basically what that's showing you is whenever it's in a downtrend, an uptrend, a downtrend, small uptrend, small downtrend. But you're looking for these red dots. Red dots is consolidation. That's going to be the buildup of power in whatever direction that it decides to go is kind of its own choice. So like you saw a little consolidation over here and then boom, it ran up. Kind of ran down a little bit, then consolidation, boom, then went down. Down to back up, in this little swing right here. So you got to really look for this consolidation and know which way the power is going to go, and that's one of your best ways to judge these stocks. Another one too is that 8-day and that 21-day moving average. You're looking at these lines right here. So you're basically wanting your stock to ride the 8-day moving average above the 21-day moving average. Anytime that you see this start to go up and then come back down and dip below that 21-day moving average, that's when you should start being concerned on your sales. And we'll explain on how you ride the edge and on entry and stuff. So basically you're looking for a stock that's on its 52-week high or close to its 52-week high, because you're not going to be dealing with a lot of volatility as far as bags, people trying to short the stock because there's a lot of money inflow and outflow. So whenever you are riding close to this 8-day moving average exponential is a great time to buy. Like right here. Right here is a great time to buy. Right here is a great time to buy. You're looking for that thing to ride up, and then even when you come back down, I'm gonna show you guys how to secure profits in this area right here. So now that I've shown you on this, I'm going to jump back over to the other side of the video, and I'm going to explain a few different things on how to ride the edge, and talk to you guys soon.
Alright guys, now that I've shown you how to set up the TTM squeeze on Thinkorswim, this ATR is what I wanted to go over next. So this is going to be pretty important on your entry and exits. Like I said, you're looking for the moving above the 8-day moving average to the 21-day whenever you make your entry, so that you know, like right here would really be a good entry. But how do you exit? So basically this line right here, the ATR, is an analysis indicator that measures market volatility, and it does it in 14-day periods. So intraday, daily, weekly, monthly. It basically is going to show us where and how to set our stop losses and our limit gains. That way we're always in the money, and then also being able to ride the edge. It's hard to do right now because the market's not really flowing. I can't show you the numbers because this thing's constantly moving, but it gives you a good idea of what ticks the stock is going to take throughout the day. So basically, let me show you some numbers here. Let's say that we jump in, we're right here, right? We've decided that we're starting to move right in above and get close to where we're starting to ride above the 8-day moving average again. So we want to jump in. Let's just say we take the price that it's at right now, which is $6.66. So we want to buy that stock at $6.66 and then hopefully ride everything else out and get a good swing trade out of it, right? We want to make some good money. So how do we do our exit and our limit gains? So we're going to look at this and we're going to come down here and we're going to realize that this thing is moving at right now 0.267. So let's just go ahead and call that 27 cents. So we are going to double our ATR because that's going to show when a very abnormal movement in the market, either up or down, is going to happen. So if it happens down, you can secure your stop losses at a certain point. But if it happens up, then you'll be able to secure your gains and then decide whether or not you're going to ride the rest of the market out to see if you want to make more money on that stock or not. So basically we'll take it at the $6.66. We're going to double it. So we've got a difference of 54 cents up or down from $6.66. So 54 cents above that is a really abnormal move, and 54 cents below that is an abnormal move. So that's where I'd set my stop loss, and then that's also where I would set my limit gain. You're wanting to play with probably about 10 or 15% of your portfolio on these swing trades so that you're actually making good money on them. Make sure that you sit down and calculate that out, and then you always have the money sitting on the side so you're not taking any extra risk that you don't need to take. Other than that, I'm going to kind of cut this video down. If you guys have any questions about it, please email me. I'm more than happy to sit down and talk with you guys through this and show you everything. I'm going to move on to the TTM scalp and a couple other videos that I need to shoot. It's going to be a long night for me, so I'm going to get this done, guys, but I'll see you on the other side of the field.